Friends, if you want to be a successful manager in retail, then one should be aware of how to analyze the P&L of a store. Profit and loss account is a statement which tells whether your store is profitable or non-profitable. And if it is profitable, then by how much? And if it is under loss, then by how much the store is bleeding with the losses. So friends, in today's video, let us understand what is the profit and loss account and how to read the profit and loss account for the store. Friends, most of the people get confused between balance sheet and P&L account. So we have to understand that P&L account and balance sheet are both different financial reports of the store. The balance sheet reports a company's assets, liabilities, and shareholders' equity at a specific point of time. The balance sheet shows how effectively a company's management is using its resources. Whereas the P&L statement provides information about whether a company can generate the profit by increasing their sales or by reducing the cost or by both. The typical P&L statements begins with the entry of revenue or sales, which is known as top line, and subtracts the cost of rent, security expenses, housekeeping expenses, consumables and utility, known as operating expenses. This difference is known as bottom line or net income, also referred as profits or earnings. Also, one should be aware that each and every profit and loss statement has controllable expenses and uncontrollable expenses. Controllable expenses are those which can be controlled. Examples for controllable expenses are incentives or bonus paid for the employees, marketing cost spent on the advertisements, and distribution and logistics cost. And uncontrollable expenses are those which cannot be directly controlled. For example, salary paid for the employees, electricity bill, rent paid for the property, housekeeping and security expenses. All these expenses are called as uncontrollable expenses. So now let us consider an example and explain all the components of P&L statement. So in this example, we will consider the P&L statement of 3 months of a particular company, that is the P&L statement for the Q1, that is April, May and June. So friends, this is an example of a typical retail store. So friends, on the left hand side we can see the particulars of the store, and on the right hand side we can see the expenses. So now let us understand what is net sales. So net sales is the difference between gross sales and the discount provided. So here the gross sales is 286.9 lakhs and the discount given is 56 lakhs. So the net sales will be gross sales minus discounts, that is 230.96 lakhs. So this 230.96 lakh is also called as a top line. So after removing the cost of goods sold, the margin what we have obtained is 95.38 lakhs. That is gross margin is 95.38 lakhs, which is 41.3%. So gross margin is calculated by gross margin divided by net sale into 100, which will be 41.3%. So now let us understand what is delivered gross margin. So delivered gross margin is obtained by adding gross margin and other income and subtracting the shrinkage. Shrinkage is loss of goods which is happening by theft. So here the delivered gross margin is 95.11 lakhs, which is obtained by adding gross margin, that is 95.38 lakhs plus other income, which is 1.55 lakhs minus shrinkage, which is 1.82 lakhs, which will be 95.11 lakhs. So now 95.11 lakhs is the delivered gross margin for the Q1. So now we have to understand what are the store operational expenses. The store operational expenses are the expenses which are incurred to run a store for a particular period of time. So here the store operational expenses include staff cost, rent and common area charges, utilities, that is electricity bill, consumables, which are expenses obtained for POS rolls or any other paper materials, repair and maintenance cost, housekeeping, security expenses, sales, promotion and advertising, communication charges and other expenses. So here the store operational cost is 47.82 lakhs, which is obtained by adding all the store operational cost. So this is also called as store overhead cost, and here the store overhead percentage is 20.7%. The store overhead is obtained by dividing store operational cost by the net sales, that is store overhead expense is equal to 47.82 lakhs divided by 230.96 lakhs, which is 20.7%. So now finally we will come to the store EBITDA. The store EBITDA is the difference between the delivered gross margin and the operational cost. Here the store EBITDA is 47.28 lakhs, which is the difference between gross margin and operational cost, that is 95.11 lakhs minus 47.82 lakhs is equal to store EBITDA, that is 47.28 lakhs. So now to get the final EBITDA, we have to subtract the D&L cost, that is distribution and logistic cost, from the store EBITDA. That will be 44.01 lakhs. That is store EBITDA is 47.28 lakhs minus D&L cost is 3.27 lakhs will be 44.01 lakhs is the net profit for the store. So friends, I have tried my best to explain the P&L statement of a retail store in this particular example. If there is any confusion or clarification, please do comment in the comment section. So friends, now let us take another example of a P&L statement, a very simple and basic P&L statement. Here in this example, the sales of the company is 1 lakh and they have purchased 20,000 worth goods, and also the subcontractor cost is 10,000. So now the gross profit is 70,000, that is sales minus purchases minus subcontractors, that is 70,000. We can consider that 70,000 is the gross profit. So now let us consider the overhead cost. So the overhead costs are the salary, rent, insurance, travel, telephone, post and stationery, computer cost, accountancy, depreciation and bank charges. So altogether the overhead cost is equal to 13,534. So now the net profit before tax is equal to the gross profit minus the overhead cost, that is equal to 70,000 minus 13,534. So the net profit before tax is 56,466. So friends, to get the net profit, we have to deduct the corporation tax from the net profit before tax. That is 56,466 minus 10,824 is equal to 45,642 is the net profit. Hope this was a simpler example, and if you like this video then hit the like button and please subscribe to my channel to get such more updates in the future. Thanks for watching.